Good morning, everyone, and welcome to the European crossover webinar. And we just got in our European data. We got our flash PMIs that just came across here. The market PMI came in at 47.8. It's a little bit of an improvement, but you can see here that the euro is actually going and paring back here at this point. We actually had earlier, we had French PMI, which came in a little bit better, came in at 51, so above the 50 point, the contractionary mode, but at 51. Also, German, because we've been talking about that, has been continued to remain weaker. And although a little bit of an improvement of over what was expected at 44.5, came in at 45.2, but definitely in the contractionary mode because it's below 50. And then, of course, I'm not seeing here, we haven't received the Italian flash trade balance, but we, as I mentioned, the Eurozone PMI coming in at 47.8 with an expected 46.8. We do also get UK flash PMI at the bottom of the hour. Reuters polls for 50.6. And as we come into the States, we will have Canadian retail sales as well as flash PMI here in the States, which can be 90:45 Eastern. And we also have, let's see, that's not going to be till next week, though, actually. As I'm talking about further down, which would be German IFO, but that's not till next week. So the data that we'll have in the States is going to be Canadian retail sales as well as U.S. flash PMI. We are seeing the euro continue going to be a bit on the weak side here after we'll go and get into the analysis. But we did go on and get a lower close here yesterday. Well, no doubt, but I'm referring to really on the trend line as we've extended that move. You see right here, we did go on and break. Remember, we were just sitting right on that trend line, and we did break yesterday and really opens the door for us to move lower. Now, I did mention it's 2 consecutive lower closes, and that sets us up for this head and shoulders down here to 917. So we shall see how we play out, but 2 consecutive closes below that trend line. Not only 2 consecutive closes below that, but also 2 consecutive closes going to be below 1078, and really opens the door for us to move lower. We have seen the dollar yen going and come back a bit here. We actually tagged the trend line resistance. And once again, we'll wait till we get into the analysis. I don't want to spend too much time. I know yesterday I spent quite a bit of time on the euro, and I think that was warranted because we had the ECB. But we're going to go on and we're going to move into the news, and then we're going to get into the analysis. We have seen the dollar CAD going and pair back a bit. Remember, we had that good move couple of days back, and then we've kind of just eased back and did a whole lot of nothing with it, actually giving back. So we're going to get into that, but let's go and take a look at the news. So the Aussie and New Zealand dollars find mixed fortunes as the rate outlook shifts. The Australian dollar looked to be heading for a 4th straight week of losses on Friday as the China virus dominated headlines, though the New Zealand dollar got a late lift from inflation data that just topped expectations. The Aussie was pinned at 68.45 to be down 0.4 on the week. So far, it has gotten as high as 68.79 on Thursday after local jobs figures beat forecasts, but ran into resistance at the 200-day moving average of 68.80. It now risks testing support around 68.27. The Kiwi dollar ran to 66.16 on the inflation report taken from a 68.581 trough and leaving it all but flat for the week. Some consumer prices in New Zealand rose 0.5% in December quarter. piping forecast of 0.4, thanks mainly to the higher transport and travel costs. The annual pace edged up to 1.9% and close to the RBNZ's objective of 2% inflation, further undermining the case for a case of rate cuts. The strong rise in the headline inflation should be enough to prevent the RBNZ cutting rates in February, said Ben Uday, economist at Capital Economics. And given that we now expect a strengthening in economic activity to keep inflation close to target, we think the RBNZ's easing cycle is over. The market had already reached much the same conclusion, pricing into just a 5% chance of an easing in February and a 25% probability for the entire year. Investors have also been reconsidering the risk of an easing from the RBA at its meeting on February the 4th. The dip in unemployment to a 9-month low of 5.1% is likely enough to delay a cut, says Westpac chief economist Bill Evans. It's sufficiently strong a signal for the board, which has emphasized the labor market as a key policy driver to opt for a deferment of the rate cut process, pending further information. Instead, he now thinks the RBA will cut by a quarter point in April, followed by another move in August. With this delay in the easing, our forecast for the odd to fall to 66 by March has been revised, with the odd holding around 68 by March, subsequent to falling to 66 in the June quarter. And the euro near 7-week lows before the PMI data release, and we did get that PMI data release as far as the overall eurozone. That came in at 47.8. Reuters poll was for 46.8. The euro held near 7-week lows on Friday after the European Central Bank struck a more dovish tone on Thursday, meeting than some had expected. Investors' attention will turn to the flash PMI releases for January, which are some of the first indicators of how the global economy has performed into 2020. Now, as I mentioned, the Eurozone's flash PMI came in at 46.8. That's still below the contractionary mode of 50. And more importantly, the German one is even weaker. And as we've talked about that, we all know Germany's supposed to be the engine or the hub of the Eurozone growth, and German flash PMI came in at 45.2. So we're well entrenched with that. The key data, the Eurozone and German PMI figures are expected to rise from the previous reading. Higher than expected readings could trigger a rally. The euro fell against the dollar to 10.49. It was near a 5-week low against the British pound. Sentiment has steadied overnight, as evident from the Swiss franc's weakness against the euro and the dollar, with markets firmly focused on PMI data. ECB President Christine Lagarde told a news conference after Thursday's meeting that the risk to Eurozone growth remained tilted to the downside. Some people were hoping that Lagarde could talk about the possibility of policy normalization after Riksbank ended their negative interest rates last year, but there's absolutely no such indication from her. Riksbank, Central Bank of Sweden, ended 5 years of negative interest rates last month, despite a slowdown in the Swedish economy. With that, we'll go and get into the analysis. So the euro slid post ECB below initial bias chart support, which was 1056. but held above the major level, which was 1020. If you remember, we had that. You can see right there. This carries over from yesterday, and going to the ECB, we had 1056.20. We did go below 56, but we held above that key 1020 level with a low of 1036. Resistance will be 1083. 2 consecutive closes below the trend line will target the head and shoulders of 917. And you can see here we spent the better part of the week just, leaning against this trend line, and we were looking at this, and if we did break lower, and we did, but I said 2 consecutive closes below the trend line, as well as this 1078. That's it. That's all she wrote. I mean, it's going to be open now to move lower. Anything can happen, but once again, the percentages will be tilted lower. You have to figure that if we close down here, those that are long, obviously from a technical standpoint, wouldn't be in a very good situation. The percentage-wise, you'd be playing the, looking for a lower move. Even if you're long, you'd be looking. If you're long now, and we close down here, you'd be looking. Okay, well, in all likelihood, they're going to come in next week and want to test this 1020 area. So that's where we stand here. Support now. We're going to take this off. It's going to be 1020, and that is key. And resistance, 1083. Keeping it rather tight. And obviously, if they got above 1083, that would, you can see it right there. You see there? If they get above that, you'll start to see anyone that may have got long, they may use that as an opportunity to exit and say, okay, get the heck out of Dodge. Unless you see some big movement, then let that run, and we'd have to actually clear 1105. If we did that, then it would put in a better situation. Not only would we bid back above 1078, but we would have reclaimed the trend line. All that being said, it's 1083, folks. Let's go and move on to the cable. Now, cable paused on Thursday after a solid 3-day run. Support remains a weekly level of 30.82 with resistance at 31.66. A close above 30.82 will place the bulls in control, allowing for a test of 32.48. So we've already shown that before. This is key. If we get, once again, that's why the support is going to come in at 30.82, and even when it looked like we were weakening here, it was still going to be right there at 30.82. That's huge on the weekly. We talked about that. Bear with me. There it is. You see there? And we actually tagged it last week. And remember, I think it was retail sales that we had out of the UK on Friday came in really poor and really turned things around. Looked like we were right at 30.82. Looked like we were going to close above for the week and open the door and move higher. We came down here and notice how the market held, and here we are now pushing back up. If we do that, once again, it opens the door for this market to go higher. And actually allows for a test up here in time over 33. But on the short haul, that would allow for a move up to, as I mentioned, 32.48. There you go. All right, there, 32.50.48. So it's 30.82, and in the very short haul, 31.66. No change on the cable, but it certainly looks open now to, unless something really turns around. As long as they close above 30.82, we're certainly going to be moving higher. Bulls will be in control if we close a week above 30.82. It's that plain and simple. Let's go and move in now to the Aussie dollar. Now, the Aussie closed below key support level 68.48 for a third consecutive day. The pair will remain on the weak side ahead of the RBA. Minor support remains 68.17 with resistance at 68.86. Now, you can see here this was key to 68.48. we had two closes below that. But the difference was, and we reference that. Look, and that is true. The RBA has been hanging their hat on this employment, even over the last couple of months, when even when they would get, let's say about 2 months ago, they would get positive data. They come out and say, "Oh well, it really depends on that employment rate. We really need to go and push that down." So remember, there were a lot of shorts that are being taken ahead of that, expecting with the weak consumer demand as well as Australian bushfires just to add more to it, really opened the door for them to move much lower in anticipation of an expected rate cut. But like I said, we got that employment data, which came in quite favorable and even was a surprise, remember? So at this point, certainly has lessened the opportunity for a rate cut in February, especially the one thing the RBA is focused on, which has been the unemployment. There'll probably still be a little bit of concern because, once again, with the Australian bushfires and the employment did come in good, but the consumer data has been weaker. That really takes it off the table and what they're looking for. And I think they're looking for a rate cut now in April. But nonetheless, it'll probably keep us on the low side. So we'll see how this plays out. But certainly, if they can get above 68.48, that helps the cause. But you're not going to go bullish until we get above 69.14. But as we said, short-term resistance is going to be right there. Let's see, actually right there. See coming across. So 68.86 on the short-term resistance and support 68.17. You can see that. No changes here. But like I said, we are above here. We've given it the benefit of the doubt, so it keeps its little bullish mode for now because we are above the trend line. And if we can close above this, it'll definitely keep that. But like I said, if we do slide back down here, going to probably end up with a bearish mode. But I think the market will still be a little bit on the defensive ahead of the RBA, but not necessarily break into new lows unless we see something significant between there. Looking at the Kiwi, Kiwi fashioned a mild rally in what's been a tight range over the past week. Support remains 65.72, followed by 65.44. Resistance is 66.46. So as you can see here, no changes. And we've been stuck in this exceptionally tight range. Moving on to the dollar CAD. The dollar CAD faded back after coming up short of resistance at 31.81. The daily bar is a gravestone doji right at a key level, which was 31.36. You can see that. Support is 30.97 on Friday. Well, if you remember when we had the BOC, the market jumped and we started sliding and sliding back. And remember, we held that at 30.97. I remember in the room saying, hey, support's 30.97. All I did was I looked at the levels and boom. And like I told you, I mentioned earlier, I wish I would have just gone and picked it up at that point. I wasn't necessarily expecting the big jump we got, but still that would have been a nice level just to even expect a little bit of short coverage. So that's going to be the support, which is going to be 30.97. That's actually the retracement once we got once we had the BOC decision, we had dipped back and we held 39.70 and we made that move higher. So that is going to be support. And keeping it very tight for right now. Resistance, at least for today, is going to be right there, 31.65. But it's got to be a disappointment for those that may have got long and stayed long to see this thing pare back. We talked about that because remember, although this has played out again here, but and we did remember this is what would happen. I think I told you, I mentioned this reminds me. I was saying at the time, I go, it reminds me of the move we saw, and I said it was either 3 or 4 months back, and I think it's here. Remember how we were barely hanging on, barely hanging. It looked like we were dropping. We turned around and zoomed and took all these out. Then we added on. We had this strong day, and we added on, and then we just sat there and we just stymied before eventually breaking lower. Well, we went a little bit higher, but it was intraday we went higher. We actually just ended up closing lower and even closing right below the 31.36, which really opens the door for them, as I mentioned, to potentially drip back to possibly 30.97. So the dollar peso rallied on the initial equity sell-off on Thursday morning, but pared back as equities challenged highs. And we're actually even higher now. Equities are back on fire. NASDAQ new highs. Support is going to be 1874 with resistance at 1873. Well, heck, we're 1873, even below the 74. But a good reason why that's the case, because as you can see here, we're back to challenging these highs. And if you look at where we are with the NASDAQ, we've even actually come up to new highs. And we had that nice head and shoulders kind of working, and we've now pushed up even higher. And it's a Friday path of least resistance, probably going to keep that pressure on. So with that, let's go and take a look on a 2-hour chart. Support's going to be right there. Right, coming across here. 1870. And we said resistance at 1883. That right now is going to be right there coming across 1880. You can see that right there. You see there? That's going to be the resistance, 1880 now. Which is what we had before, but we were giving a little bit of benefit of the doubt. And actually, it's probably holding up very well considering where equities have jumped back up to. Let's go on and move on now to the dollar yen. So the dollar yen fell back to the pivot before gently bidding itself up to 88.50. Well, you can see here we're actually even higher than that right now. But you can see that pivot. We've talked about that forever. That 927. That actually went. I didn't even think it was going to get that low quite that quickly. If you remember, we had our bias chart support at 942, which obviously the market got to. But I thought from there we'd probably see a bounce, and we actually ultimately, you can see the 942. We actually made it down to the 927. The pivot, so certainly seen some short covering. Not really a whole lot when you think about where we are in equities. So support's going to be back here at the pivot. If we were to break down, it certainly doesn't look at that point now, but the next level will be 908. Resistance, we put here at 874. And let's say 974. Still bullish as long as we're above this pivot. We did go below the 964, which is key. That's that breakout area, so you can probably even make the case at 964. But that being said, we're still above the pivot, so it's going to have a bullish tone. And onto the dollar index. The dollar index remains in a quiet activity above the breakout level of 97.42. And you know what? I don't even know. I don't know why it didn't even save my analysis. Doggone it. But anyway, we'll go and move into it. Well, here's the key. We did move higher, and I put on here, and I remember the analysis is frustrating that it didn't save it. I said we had our best close. We had our highest close in 3 weeks. That's what I remember. When their best close in 3 weeks, you can see here 1 week, 2 weeks, 3 weeks, probably a little bit longer than that. We didn't quite come up to here because you can see that. So I remember the analysis. I was saying, okay, well, it didn't quite close up to here. We were right there, essentially. So essentially, you know, as I mentioned, best close in 3 weeks, probably almost 4. But in order for us to be on a full-on buy mode, we need to get above 97.89. So that's going to still remain the resistance, although there's no denying that, you know, we're bullish. Support, I already in my analysis was for 97.42. Might be a little bit rich. It really should be, because we want to give it just in case. So it's going to be, let's call it 97.34. But 42 is a breakout area, and that's where I'll tell you what, I think I'm still going to stick with that, 97.42, which was the breakout level. That's where I had from the analysis last night, although for whatever reason it didn't save it. But it's going to be 97.42. And resistance is going to be 97.89. Now, 97.89 is that key weekly level. We talked about that. If we can get above 97.89, it goes full bull on mode. Well, this is probably going to coincide with the euro down there at 97.20. Now, once again, with the euro, because we talked about that, the euro comprises 56.4% of the cash dollar index. So quite often they'll trade inversely. And with the euro, if we were to get down there to 10.20, that's probably going to coincide at the same time with 97.89. Actually, if we get down here, it'd probably be above 97.89. But with the euro, there's more going to it. As I mentioned, for the dollar just to go full bull on mode. Look, we lost the 10.78, and now we even lost the trend line. And what I was saying was yesterday, you can say, well, okay, now it's bearish. It is, but if we get 2 consecutive closes, which would be below 10.78 we had yesterday, then yeah, then it's just like, hey, you know, bulls are going to be full on mode for a move down here on this level, which is 917. I think Amanda has 897. Even if you're bullish, if we come down here, you got to be thinking, okay, start of the new week, we're going to have to challenge 1020, and let me see if I can make a stand there. That's what I'm saying. You got to be careful because, like I said, even if you're bullish, this market's not holding up very well. If we start to break lower, market's going to go with that level. Let's go and move back into the cash dollar index. Here we are. So we need to give up 97.89. Now, let's go and move in real quickly to the cable. We do have data out. Flash PMI came in at 52.4. Boom, there we go. There's a 31.66. And look, this thing, if you're not, you know what, bulls are going to be in full control unless you see something really crazy happen, like we're going to turn around and lose more than 80 pips right now. Maybe not right now, but I'm saying right now as far as today, because remember, 3082 is that key weekly level. We were there last week and we got the poor data. I believe it was retail sales, and then the market turned around and gave up. Now we just tagged the resistance. We got a little bit above it. We're kind of peering back just a little bit now. But like I said, they're going to be buying this thing on dips to 3082, and bulls will be on control if we get that. We'll have wrested control away if we get that close above 3082, and there we are. You can see right there. That's huge. That'll be the best weekly close, and would be 4 weeks if we get that this week. And we actually challenged it last week. We couldn't do it. We came back down, and the market, to its credit, it really held its own and stayed bid. You can see that right here, and it's going to really open the door for us to move higher. First target would be 32.48, and really would be open to move up to here in time above the 33, and that would make sense. With that, let's go and move into the, well, we've actually come up a decent amount for that 31.66. Let's go and move into the cross rates. So we are seeing the Kiwi yen do somewhat better here. Even you know, after yesterday, remember we had the yen reach some of these pivot levels. I think we even had our analysis on the move this out of the way. Yeah, remember we just had just a hair below 72 cents, and we did get a move actually below 72 cents. Low was 71.91. We had 71.97. And we moved up. We actually ended up with a nice little hammer here, and we're pushing up higher at the moment. How much further can this go? Well, we probably have a little bit more short covering in light of where we are right now. I don't know if it's going to push it all the way up to here, which is 72.80. Although that's not that far away, so I'll tell you what, we'll go with that. So 72.80 on the upside. And support is going to be right there, coming right across. You see that here? These touches come across. 72.27. Looking as far as the euro yen, well, we know how weak the euro is. And the potential that it could break lower. It's going to be right there, 20.76. And even as strong as the yen pairs, and I'm saying in reverse as far as the yen pairing back, have been, look, this looks feeble here. So certainly if the euro continues to weaken, certainly that door is really open from a percentage standpoint for us to go on and move down there, potentially down to 20.76. Resistance would be right there, 21.33. Just going with the technicals. At least for now, it still retains its bullish mode. And we'll move into the euro on. once again, all about the weakness in the euro. We've joked about this earlier in the week, the battle of the two currencies as to which one's weaker. No, I'm weaker. No, you're weak. No, I'm weaker. No, I'm weaker. The battle between the euro and the dollar, who's the weaker? Um, Obviously, we got that surprise employment data out of Australia. So certainly you're seeing the euro weaken, and it's clear that's going to be, for us to move lower, and we're going to be looking right there at 61.03. We'll actually allow it for the move. You see right there, just to move a little bit lower, which is right here, which is going to be 60.89. Call it 60.90. Still, this has been sitting there, so we gave it the benefit of the doubt because we moved higher, but it will, close to moving into, if we break lower, to move to a bearish mode. Resistance, it's going to be right there, that high, which is going to 61.68. And let's go and move into the Euro Kiwi. Well, here we go again with the euro being so weak. And certainly the doors open now to push much lower, especially now with the euro, with the Kiwi strengthening. So we're actually just going to play it down to these lows here as far as our support. And that's going to be 66.31. Seems a bit of a stretch, but if we continue to weaken, they're going to want to challenge those lows. So 66.31. And resistance, fairly easy, coming right across there. And it's actually just above the day's highs, which is going to be 67.32. And that might even be a stretch to even consider that. But once again, that'll be the resistance, 67.32. Certainly bearish. And the market is going to be spying these levels down here. So, coming into the end of the week, certainly the potential is for us to go and move lower here in the Euro Kiwi. Well, on the Aussie end, we're hugging that trend line. We're still holding there, but could expect to be doing a little bit better than we are currently right now. Resistance is going to come in right there, right there. You can see that, and just above this close. Let's see, open. It's going to be 75. Let's call it 75. I was going to say 75.23. Let's call it 75.25. And support, we're going to keep that the same, 74.82. Let's go move into the guppy. Well, tight range, and they actually challenged up here. It's going to be, they're playing I don't say the percentages, but last week we did go on and fall apart in the cable. We did make a run up here into the 31.66, and look how they paired back real quickly. They remember what happened last Friday. That being said, as long as we close above 30.82, the bulls are in control. But you can see how quickly they dip back. We had 31.66. We made it to, looks like it appears to be like around 31.71, and we've come off a decent amount here. Euro still working lower here. And that's what I'm saying is, as we come into the week, you got to focus and think of how's this market going to close. And the concerns are we didn't even get a bit of a bounce, off of the PMIs, which certainly aren't good. But I mean, remember the emphasis on is continues to remain on Germany, and like I said, so looking at it from a percentage standpoint, the risk right now is that we're just going to continue to push lower, and probably a decent chance we'll push to new lows from yesterday and take out 1036. Let's get back into the guppy. With that being said, that's going to be resistance right there, 44.31. And support, keep it pretty tight right there. 43.30. 43.30. Seems a ways off, but right now we're just, if you look at where we are right now, in today's range, it's just, it can vacillate, back and forth. And like I said, we talked about if we do see the sterling pair back some more, although I think they'll be defended. Any moves back towards that 38, you're going to provide a good area for shorts to go in and cover at. But that being said, it's going to be 43.30. And let's go move into the sterling on. We've held it rather well here, and we know that the Aussie is starting to strengthen a bit, and that supplies surprising employment data, but we're still holding up pretty well here with the sterling odd. So that being said, resistance is going to be right there. I think we may have already had that, which was 91.92, and that's what we had. You can see there. And on the downside, I want to give the cable the benefit of the doubt here. It's going to come in right there, 91.26. You can see that coming right across there. And it's just below the day's lows. There. 91.26. So that completes it. And you can see here, we talked about this, the euro. And we talked about the inverse relationship with the cash dollar index. Obviously, the dollar index is moving higher. And we had a good close yesterday, as far as the best close, as I said, in 3 weeks. But the key for this to go full-on bull mode is 97.89. Well, that's going to probably coincide with the euro being at 10.20. And we did break the trend line. We did get above 97.42. That's going to be today's support. I don't want to call this a reluctant bull, but it's going to be, it ultimately might just get pushed past the 97.89, which is going to open that door. So you think if we get past that weekly pivot, well, then we come back to what we talked about. 2 consecutive closes below 1078, you got that momentum going. We close down here, then all eyes are going to be on the head and shoulders target. 917 is what I've got. Amanda's got 897. I mean, they're both in the same ballpark, but we're both looking at this head and shoulders that I just happened to see develop a few days ago. I wasn't sure if that was going to play itself out, but it certainly looks that way. Now, there was a possibility that we could have moved higher. But remember, I was saying that yesterday. I went on ad nauseum about, hey, ignore the rhetoric, just go with the levels. But that being said, they thought her rhetoric was a bit on the dovish side. And don't forget, the overhang still is going to be this poor German data. And, I mean, you saw it again today. Okay, well, the PMIs came in a little bit better, and look at the Eurozone. It's still below 50, but it came in a bit better. But look at Germany, man. It's in the freaking toilet. You see what I'm saying? So it's hard to get beyond that. And then that's what I was saying is if you just focus on those things, and I thought she might have offered maybe a little bit of not hawkishness, but I mean, I guess that's what people were looking for. Uh, Conversation as far as potential for normalization. And she didn't. And I think they pushed her in that because I mean, one of the reporters was talking about the Riksbank and how they've stopped and blah, 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 what's going on, what's going to happen now. And we're not, so really everything's leaning towards the potential to move lower. And we talked, one of the things we talked about this is how many times bulls have been left at the altar. You see what I'm saying? So we talked about that when it closed below 1105. That was one of the reasons I kept saying that ignore everything else, just go with the levels, because we talked about this. Bulls got left in the altar again after closing below 1105, so they weren't going to come back. And the only way we could have mustered something is if we got above 1126, and then the market would look to maybe bounce back. Wouldn't be full bull on mode, but you can see here we are just weakening again. So the percentage wise is for us to go and challenge those lows, take out 1036, which are not even that far away, and next thing you know, you're knocking at the door 1020, and then now everybody's just spying the Head and Shoulders target. Anyway, that's what we got here. Thanks for joining us here. Good luck trading on the last day of the week. And thanks for joining us here on the European crossover.